you've been writing so much and so extensively about autonomous vehicles and basically the future of mobility. What does this landscape look like? How does Tesla fit in against some of these other names, including Alphabet, which reported yesterday?
Sure. So autonomous cars, we've been writing about that for about 7 years with our colleagues at Morgan Stanley across about 10 sectors. Morgan, autonomous cars, the technology is real. It's a noble cause. There are hundreds of companies, if not more, allocating many tens of billions of capital to solving this problem of autonomy. That said, when we at Morgan Stanley talk to the scientific community and the tech community, it is replacing a human driver has been described as the hardest technological challenge humanity has ever attempted.
Really?
And the lawyers that we talk to say that it is the most complicated moral and legal and ethical challenge that any lawyer has ever addressed. So the combination of those two things leaves us optimistic of the very long-term future, but telling investors, please keep your expectations under control for the next 10 years. We think this is way beyond 2030 when you see the inflection.
You think it's beyond mapping the genome, for example?
This is, I'm not a scientist, but this is how it's been described to me in terms of the closest, it's been described as the closest approach to general AI. I'm sorry if I'm sounding ignorant to real tech heads out there that know better than us, but we're just trying to connect the dots here, Carl.
So when you talk about autonomous vehicles hitting the road on a mass level, or you talk about in the case of Tesla, this idea of robo-taxi fleets, when does that actually become realized? What's the date, potentially?
So we work across 7 teams at Morgan Stanley, 18 analysts across different regions. By 2030, our forecast of level 5 autonomy miles penetration, that's level 5 is no steering wheel, is sub 0.5%. Now, when you talk to some people that say, hey, that's almost nothing, that's zero. Hold on a second. Uber a couple years ago was 0.5% of U.S. miles traveled. One out of 200 miles is a lot of miles. That could be 1 out of 15 or 20 miles in a city. So even these small numbers we think are incredibly ambitious. We don't get into the kind of double-digit penetration on miles traveled until beyond 2040, Morgan.
I want to talk about Tesla,
sure,
where it is today. We had an analyst on the beginning of the show with a very different price target, $800 as a neutral now that it's trading up near $900. What would it take for you to be wrong, just on the conservative side with this? And I ask this from the context of having covered Apple for a long time.
No.
Everybody expected them to come out with a phone, but nobody expected it to be the most successful consumer product, arguably, of all time.
Sure.
What would it take for Tesla to do that well and prove you wrong?
So there's different scenarios that we explored in our research. And just before I answer that, let me step back and just say, if Thomas Edison and Henry Ford made a baby, that baby would be called Elon Musk, okay? I mean, he's absolutely incredible what he's done, using his enthusiasm to really change the world, if we're being honest. Now, what we mean on what the recommendation on the stock is a different thing. We think what's in the price right now is something approaching 4 million units of annual volume by the year 2030 at a 15% EBITDA margin. So that would be a margin roughly 2 times an auto industry average at a level of volume of 40%, maybe approaching 50% of Toyota, okay? But that's if you just look at it as an auto company. If what's happening now in the market is essentially by doing a deal with China to bring in some capital and to kind of draw a line under the distress argument, what Tesla's basically thrown a stick of dynamite at a fireworks store. And it's led to a chain reaction whereby auto analysts, both buy side and sell side, are passing the stock over to tech analysts. And so from a tech perspective, they aren't just thinking about numbers of units sold times price or margin. They're thinking of users, recurring revenue. Do they become a battery supplier to the world's auto companies, right? When you start doing that, if you had tapped into 10% of all the cars on Earth and they could make $10 a month, that's $400. If you could tap into 10% of all cars and supply batteries by making their own batteries, watch April 4th, where they might unveil a terawatt hour of capacity, that's how you can then add and then get into the multi-$1,000 price targets that people are talking about.
Isn't that handoff inevitable for GM and Volkswagen and others?
When we talk to clients about Tesla, to be perfectly frank, the discussions aren't with auto analysts anymore. The discussions are with tech, and it's not just tech. It's Tesla has monopolized publicly traded ESG and tech. So the bigger story, if I can leave you with this, I expect that you'll be discussing this, and I'm delighted that Jim Cramer talked about this too. The bigger story here, Morgan, is This is climate change. And it's tapped into something, retail and institutional, at both those levels, where Elon Musk and his kind of ESG portfolio is seen as an incredibly noble, value creative way of attacking ESG challenges, particularly climate change.
I get all of that. I can appreciate that argument. I can appreciate the fact that there is this debate out there about whether this is a tech stock versus an auto manufacturer stock. That said, and you said in your note just this morning, the fact that there's so much competition poised to come online when it comes to electric vehicles over the next couple of years.
Yeah.
I mean, you mentioned it right here. 4 different auto company Super Bowl ads featuring electric vehicles just for the Super Bowl. What does that look like when some of this competition comes on and there's no longer an ESG monopoly?
So this is one of the inconvenient truths, then, if you're talking to tech folks, where Tesla might look reasonably valued versus some other names. I won't name those names, but more reasonably valued than versus autos, as we find ourselves reminding tech PMs, look, there's 15 or 20 million human beings making cars and parts in the globally. Most of those workers are unionized. There's unbelievable national security implications behind, national champions. And we're having this discussion. Before you declare Tesla the winner right now, it's worth reminding everybody that EV penetration today, February 4th, is only 2%. Tesla has a quarter of that 2%, and taking nothing away from Elon and Tesla, they're by far the best, right? But 2% penetration, 20 million jobs, governments, and you have China, which is, let's say, has a significant vote on the direction of Tesla's shares over the next few years. Let's just leave it at that. This has the potential to be complicated, while still having in the back of your mind the dream of the multi-thousand-dollar.
So after a week in which the president said we have to protect our geniuses, referring to Musk,
correct.
Your point is that China has some leverage over how Musk fares.
I'm glad you brought that up, Carl. So Tesla is seen as important to the United States from a national security perspective and environmental security. He's important to the People's Republic of China from a, hey, show us the way, transfer your tech and IP, and we'll, let's do business together. And he's clearly important to the tech community, which is taking over the stock, right? And he's very important to the ESG and retail ESG community. So those 4 things,
he's at the center of everything.
He's the chosen one. He's the chosen one, Carl.
He's Neo.
Okay, there you go. I don't know if you're referring to a Chinese auto stock
from the Matrix. Yeah.
Okay.
He knows Kung Fu,
okay.
But he's at the center of all these structural shifts, is your point.
He's monopolized the discussion and even our engagements with auto companies. I'll be back at the stock exchange tonight with General Motors, for example. GM has a capital markets day tomorrow. The discussion is going to be dominated by Tesla, and even auto companies massively respect Musk and the product. They do.
All right, I want to go back to more broadly what autonomous looks like, what this future of mobility looks like, especially if you're not getting autonomous vehicles in a significant, meaningful way until potentially 2030.
Well, that's meaningful.
Where are we? Yeah, but where are we seeing it? I mean, because we're starting to see the adoption, at least experimentally, when it comes to things like trucking, rails, some of these other areas. Certainly FAA last night just publishing its latest proposal on package delivery by drone.
Sure.
What does it look like? What are the opportunities?
So you're going to see a lot of trial and error. You need to see some fail fast. You'll see cars going up and down some of the streets without left-hand turns. And then eventually, as the algorithm learns and starts to communicate, maybe you can make a left-hand turn. It might require an act of Congress or an act of local city council or MTA to make that happen. So just like any other space race or Manhattan project, this is of a very important nature, and there's no substitute for real-world miles. So you'll see pockets of geofences and applications. It is real, but to actually fully remove the driver en masse is something very different. One client said, Waymo, Alphabet's autonomous unit, they say the tech's ready, they just don't want to kill anyone. And my response to that is, you kind of can't have it both ways. You can't completely eliminate the risk of those kinds of accidents.
Now, with Tesla at $900 a share, taking it back to Tesla specifically, I think back to August 2018 and Elon Musk wanting to take this thing private.
420.
Yeah, he kind of dodged a bullet there, didn't he? I mean, is there any argument left, given that this is a valuation move for Tesla? And yes, they've done some things operationally which are great, but I mean, he would have missed out on a lot. Shareholders would have missed out on a lot if he had indeed taken it private, at least today.
So on New Year's Eve, I sent Elon a message, and I kind of quoted Thomas Edison, where, many failures are from people that didn't realize how close they were to success before they gave up. I think all of us can thank him for not giving up. So if you look at the path and the arc of any entrepreneur's career, particularly even the most successful entrepreneurs, Steve Jobs, et cetera, there were moments where they almost lost it. And perhaps you could chalk that up as that's the only way we get better, is by looking in the mirror and taking the guidance of your family, your investors, your board, and people around you, even the media, even your program, is, whoa, whoa, whoa. If I really want to change the world and decarbonize the world, I can't blow up in the process. And thankfully, it looks like at least today, he rescued himself in time.
Last time you were on, we talked about your bear case at the time. Why have it? From an analyst model standpoint.
Yes.
And your answer was it's the leverage.
Correct.
So has that now been answered, given the positive flywheel effects of having the capital markets appreciate you?
So since we were last on the program, our current bear case is $115, which again might be the new $10. It's an extremely low, hard to fathom level, but we had to throw that out there just to cover if. While their leverage is very small relative to the market cap right now, it's still significant relative to their revenues, right? And if there is, using Elon's terms, a force majeure or something, if a China situation keeps kind of creating a liquidity issue, but don't expect that to happen. If there's an economic event, on and on, this is a high fixed cost, high operating leverage with reasonable financial leverage relative to the size of the business operation. So we can debate till the cows come home whether 115 is the right bear case or 3 months ago's price is the bear case. We think that as the stock goes up, it tends to go up, and you have a virtuous circle. And we suspect, although clearly remote in the conversation now, that if we had a scenario that brought the stock from 900 to 500, people would be talking about 300. And if you get to 300, people would be talking about 200, and on and on. So that's part of the psychology and the leverage of the market working both ways.
You think a secondary is in the offing in the next 12 months?
No comment. However, we have modeled in our published model roughly a $3 billion equity raise as a kind of starting point, something they could do. It might be nice to have, but I would say the company has denied the need to do it and was pretty forceful with that in their last conference call.
Crazy question for you, but I ask it in part because I know you watch this sector as closely as I do. Mm-hmm. Do you think any of the achievements or developments that are happening at Elon Musk's other company, SpaceX, are contributing to some of the positive momentum in Tesla right now?
First, that's not a crazy question. Well, we've been writing for many years about the relationship between SpaceX, which is arguably the most important private company in the space industry, and certainly has the president's attention and the vice president Pence and NASA and Tesla. A few years ago, when Tesla's financial outlook looked a little bit shakier, we thought there might have been room for a more imminent collaboration. In this environment where Tesla can kind of, achieve escape velocity, that's a space term, Morgan.
Thank you.
Then
Thanks
they could be. Then perhaps that relationship is more opportunistic. We were kind of laughed at on the last Tesla call when we asked Elon if cars could be fitted with antennas, essentially, or consoles that could be compatible with a Starlink constellation. Elon took the question seriously and then kind of brushed me aside.
About this too in the past.
Yeah, we think there's something there, and no, it's not a crazy concept whatsoever. Stay tuned, potentially.